Hello, and thank you for joining us for our latest Finovate Webinar, Digital Overload, What Do Customers Want Now? I'm David Penn, Research Analyst with Finovate. Leading our conversation today on customer experience are Andrew Stevens, Principal in Banking and Financial Services with Quadient, and Celent Senior Banking Analyst Craig Focardi. Today we will examine how COVID-19 is impacting and reshaping customer banking journeys, look at some of the customer-facing failings in the industry during the crisis, and review strategies to better understand and act upon customer preferences and expectations. Please know that this is an interactive presentation, and we look forward to fielding your questions. Please use the Ask a Question button at the bottom of your screen to send us your questions, and we'll be happy to take them up toward the end of our presentation. And speaking of interactivity, we're going to start today's presentation with a poll. We're going to give you a little bit of time to go over the poll. It's fairly extensive, and at the end of our presentation, or toward the end of the presentation, we're going to go ahead and go over the survey results. So I'm going to go ahead and advance to the poll now. I'll go ahead and read the question, read the answers, and give you some opportunity to respond. Please know that after we advance the slide, you won't be able to respond, so go ahead and take a look at those questions closely and make your picks as quickly as you can. So here's our poll question for today, and I'll go ahead and read the question. What are the top 3 challenges your organization is facing in its efforts to engage and support customers during the coronavirus pandemic? And what we'd like you to do is choose 3 out of the total 9 responses that we're offering. So again, I'll go ahead and say, what are the top 3 challenges your organization is facing in its effort to engage and support customers during the coronavirus pandemic? Again, we'd like you to choose the top 3 for you. I'll read them out. Inability to quickly affect changes to systems, low customer utilization of digital channels, inability to personalize digital customer experiences, staffing challenges due to remote working or absenteeism, increased cybersecurity risks or vulnerabilities, adhering to social distancing guidelines, inadequate digital channels capability, rising technology costs to service and support customers, or last, limited digital fluency among frontline staff. So again, we have 9 responses. We'd like you to pick up to 3 if possible of those responses that are some of the challenges that you and your organization is facing in your efforts to deal with, engage, support your customers during the coronavirus pandemic. And at the end of our presentation, we're going to go ahead and take a look at those responses, and Craig and Andrew are going to go over those and sort of see how they sync with some of the understandings and insights that they have reached. So go ahead and pick 3 top challenges, and we'll go ahead and get started with the rest of the presentation here. We will hand it over to Craig, who will take it from here. Craig, it's all yours.
Well, great. Thank you very much, David, and good day, everyone. I'm going to paint a picture of the future with respect to how customer engagement and customer communications management are evolving. I'll present some information, some Celent survey results in a bit of a fireside chat format with Andrew a little bit. And then Andrew will share his recommendations on how your financial institution can better execute on its digital transformation journey to help you improve your customers' journeys. So we're all living in 2020 in real time, and the story has been often told, but I'll only take a couple of minutes to set some brief context for this webinar in customer communications management. Yeah, on the branch banking side, you know, the decline in branches has been proceeding apace for years. This year, it also means reduced hours or safety issues to grapple with that are keeping customers out of branches. So customers have had to use digital more, or perhaps for some, for the first time. This is easy for simple tasks, but not always for more complex tasks that both the customer and the bank typically do on a face-to-face basis. There's also been a big shift from the branch to the call center assisted channel, and with employees working from home, challenges related to that. And this can limit, the ability for customer engagement to go quickly and smoothly, across digital and assisted channels. And of course, we've been shifting to digital and becoming more digital for years, but never before has there been as impactful a catalyst for a rapid shift to digital and digital overload than we've experienced this year. From an account origination and an account servicing perspective for loans and payments, it's meant a number of specific things. Certainly in payments, cash is out and digital is in even more. But moving to digital and mobile isn't just about the website and the smartphone. There are new point-of-sale terminals in retail stores, new ways to authenticate, and it's a disruptive adjustment for a lot of customers and for some financial institutions themselves that have been playing catch-up. On the lending side, socially distant mortgage loan closings have gone from leading-edge technology to an essential technology for many lenders. And on the loan forbearance and collections area, a relatively sleepy backwater of the banking operation after many years of a healthy economy and low defaults, this area has been jolted to life since last March with a lot of disruption in that area and new ways that customers and their financial institutions need to better engage and interact. So, in addition, now everyone is living, working, and banking from home. And there's some big questions about work from home and is it here to stay? For how long? What will be the permanent changes versus the short-term changes? Some see dramatic cost savings from this, a benefit from a financial institution perspective. But in terms of where to work and how to work, others see it as temporary. Yet at other times, some organizations are also thinking that we're just going to go back to the way things were, or even though there's a downswing now in terms of people leaving offices and working from home, we could see a drop in prices and rents, and we could see people coming back, into offices when it's safe and the time is right. So the key point is that we need to adapt and automate for the present and to automate for an uncertain future. Now, digitization, of course, isn't new. It was already in full swing, and so that helps us quite a bit. We all, I think, know what the key market trends are, but here I also want to focus on the strategic implications for your business, the banking strategies you need to undertake, and the implications for customer communications management and customer engagement. We all know customer expectations around convenience and digital, the right channel, the right time at any time has been here for a while. What we're seeing more recently has been the utilization of analytics and AI and the integration of various kinds of customer experience technologies to result in a more omni-channel, cross-channel experience, for as many use cases as possible. And a lot of the digital technologies there that you see have been converging, and how to knit those things together to bring things together is happening in full stream. The changing channel utilization, just an elaboration on this, the imperative to be omni-channel, and as I mentioned earlier, to tie together those assisted branch and call center channels with the digital one. And we're seeing customer communications management expanding and evolving from more of a point solution and single or multi-channel solution to really being a true enterprise channel solution. And all this, it ultimately is about competition and the performance of your financial organizations. And you're not just trying to serve your customers, but you're trying to outcompete your competitors as well. And that puts a lot of pressure on the business. And there's a view that by becoming more enterprise and componentized and tying together different channels across the different customer journeys, that things can be much better for your organization relative to the competition. So that's sort of a brief summary overview of the market environment. Andrew, you're out there talking to financial institutions a lot. What are your thoughts on what I laid out here, and what else do our attendees need to know?
Thanks, Craig, and hello, everyone. I think there's probably two areas that we see when I'm out there talking to people all the time. The first one is in that customer experience and communication area. There's an emerging realization that it just doesn't exist in a vacuum. But at the moment, it probably does in terms of technology. And we've seen a lot of questions getting asked about the ease of integration, that ability to say, we don't want to have an entire process and then talk to the communications platform. We want actually everything to be seamless between the two because of the value you get out of it. I think probably the other thing that I'm hearing a huge amount more over the last year is an obvious trend in understanding that communication and experience changes all the time. For goodness knows how many centuries communication was paper or face-to-face. And then we've had this explosion of different channels. So we see a lot of people contacting us talking about how they want to talk to us about our roadmap and the innovation that we put into products, because they realize that actually what they want to solve today isn't going to necessarily work for tomorrow unless they're working with people that are willing to continually innovate. They don't know what that answer is yet, and nobody does. Nobody knows what the next new channels are going to be, but they want to make sure that they're actually covered off for the future, not just for today.
Okay, great, Andrew. Thanks for that commentary and that elaboration there. So yeah, digital transformation is underway. We all know what 2020 has been like, and what we're hearing at Celent in our research is that this digital acceleration is leading to digital overload, both for the financial institutions themselves as well as their customers. So the digital natives are doing fine. The digital non-natives, not so much. Or for those customer journeys that typically require some advisory from a financial institution, maybe an investment decision, a mortgage loan application, or something else, it's put pressure on the digital non-natives. The multiple digital channels can be difficult to manage as well for each financial institution relationship. So for me personally, I have 3 or 4 primary financial institution relationships for different things. I do have one central bank for a lot of activities, but then I have cards and investment accounts, insurance, and that's a lot of user IDs and passwords to keep track of. I can neither confirm or deny that there are sticky notes taped all over my laptop, but the answer is no, there are not. But I think the point is that multi-factor authentication, I think, is essential for information security. But with a constant evolving and changing, password requirements, that's a lot for a lot of people as they're, pushed to go more digital. When they do want to talk to a live human in a contact center or possibly at a branch, IVR decision trees can be confusing, not map every customer journey, and they require long, hold times, and so frustration can be growing amongst those consumers. And I mentioned, the security risks and the user IDs and the password. I think it is a necessary evil of the digital age, but one that is difficult for the customers. So, and then finally, I think some financial institutions we're finding are scrambling to automate more customer journeys and the customer experience. And I think that's those breakpoints and endpoints in those customer journeys are causing frustration. And it's digital overload for the financial institution itself. A lot of organizations have done a great job of pivoting to employee work from home, deploying laptops to call center agents and others, adding security to that. But communications and operational efficiency and whatnot are still very, very challenging. A lot of the digital channels are working well, but some employees don't have access to every system that they had inside the company firewalls in the corporate office. So that's made it harder for them to serve customers in some cases. So this is a summary of the Celent banking views on the digital overload problem. But in part, these results come from a recent survey that we did that I'll share the results with you right now. This summer, we did a joint survey with Arizent, and we asked financial institutions really what was the impact of the COVID-19 and the pandemic on their ability to run their businesses. And the objective was to better understand the extent to which the disruption and potential future disruption in customer interactions would have on their businesses and what challenges it was causing. You can see we surveyed a large number and a wide variety of entities last summer over a one-week period. And I just want to summarize the results for you and then, dig into it a little bit with you and Andrew on the subsequent pages. And it really introduced a lot of challenges along most points across a customer lifestyle, from account sales to origination, onboarding, servicing, and so forth, but particularly in customer acquisition. But the banks themselves, all of a sudden, because of the higher operating costs, had challenges in maintaining customer profitability. In terms of customer experience specifically, we found low or lower than desired customer utilization of the digital tools, some increased cybersecurity risks, and some staffing challenges. So that was a quick overview of the survey. Let's actually dig into the results over the next few slides here. We asked, as you can see here, over a number of different categories, what were the top challenges with customer engagement and support. The key challenges were utilization, some of the fraud risks that came from increased adoption, and the potential of confusion amongst customers and employees. These were the top issues that they were facing. And so this did put additional pressure on financial institutions to help explain the tools and support the use of the tools with their customers. The problem of abandoned shopping carts where somebody might apply, but they don't know how to finish the process and can't get a hold of a customer, support person, was one of the challenges that were there because of the difficulties in staffing or the inefficiencies around work from home that were happening last summer. Now, we, then asked about top customer challenges with respect to customer engagement and support amongst all financial institutions that we surveyed. Now, low customer utilization was a challenge of the digital challenge, but not the only challenge. Financial institutions here also said the inability to personalize the customer experiences was a big challenge. So you can see at the very top there, the cybersecurity risks took up a lot of time and attention, and the ability to staff there. That's part of the digital overload for the financial institutions. And then for the customer, you can see there in the bracketed survey areas, the lack of personalization and customization, was even higher than the utilization. It could be that the lack of the personalization caused the utilization. We didn't ask specifically about that, so I'm not sure. But Andrew, what are your thoughts on these survey results here?
I think it's fascinating, really. That third one there, Craig, is certainly something that I'm recognizing from a lot of the conversations that I'm having across the world, actually. And it's linked to probably why the low customer utilization of digital channels is further down the list than perhaps many would expect, because used to be higher, but we've now got the situation where customers have almost been forced onto the digital channels, like you say. It's been a recommended approach in the short term while we've had a pandemic, and now the organizations are saying, how do we keep them there? They're not actually getting the experience that really they deserve to get. They're not getting the joined up, the seamless experiences. They're not getting something that's personalized to them. In order to keep them there on what is a nice low-cost self-service channel, we need to do so much of a better job. So that's probably where I would really pull out the most important part of this.
Mm-hmm. Okay, great. Yeah, very, very, very insightful. Much agreed. So we then asked the financial institutions the same exact question, but we've segmented here by the size of the financial institution. Larger national banks, mid-size, regional and state-level financial institutions, and then smaller community-based financial institutions, probably, $1 billion of total assets and under. And so I think it's important for those of you on the phone, to think of the results in terms of the size of your organization. And I'm just going to highlight, 2 or 3 of the key points here. You can see first the third point down, that's bracketed. The ability to personalize, again, is high, but it varies fairly significantly by institution size. So this was a very large issue for the largest financial institutions, and a smaller one for the small to medium-sized institutions. And that could in part be because community-based financial institutions do pride themselves on being close to the customer, and that also means being accessible by phone. So in that sense, probably a more normal situation, and those community institutions are more used to talking with their customers at the call center and in the branch. Now, they may have had challenges in those areas in supporting people. We don't know, but it's interesting to see, I think, the more digitally dependent and focused large financial institutions, which is an excellent strategy. This lack of, this challenge around personalization was a bigger issue for them. And then the next bracketed question down, we can see there in that dark blue bar at 47%. Indeed, the community-based FIs did have challenges adhering to the social distancing guidelines, or being a challenge for them. So if you're more dependent on the branch, then that's going to be a bigger problem for you in a more socially distanced world. So indeed, a larger adaptation challenge there. And then the utilization of the digital channels as well, a bigger issue, a bigger challenge for the financial institutions because of the positive, greater adoption rates that's known to be held amongst the larger banks. So, Andrew, any nuanced comments around digging down, looking at different sized financial institutions?
Just on that top one, Craig, the inability to personalize digital customer experiences. I think if I translate that into what I'm seeing, it's all about how people see a problem and whether it's an opportunity. So if you look at the smaller organizations, you're looking at the technology to say, like, how do I get beyond the basics and really show the customer that we really care? It's a financial problem, really, is how do I afford something that I can take it beyond the basics. If you're a medium-sized organization, you've generally got a reasonable balance of finance and agility. So there's certainly a lot of work to be done, but it's more around how do we improve our tech to compete with the big players. Whereas when you've got those really large organizations, they've got so much technology that they're trying to integrate with and trying to navigate through, and so it's a proper minefield. So I think that's where it becomes that real problem there, is how do you link everything together to really improve the customer experience?
Yeah, great. Yeah, thank you. So very, interesting survey results, and, we've talked about, where we're at and where we need to go. And I promised, we'd help paint a vision of the future and how to get there. And so you then asked organizations, what's the most significant source of disruption for the next 3 years that's going to happen? Now, drum roll, please. No surprise here. COVID-19 is at the top of the list, but that's not the only story. You can see this sort of the sideways stacked bar chart here. We asked, what is the most impactful source, but they got to rank them. So you can see blue is number 1, orange is number 2, and then so forth. So if you look at the combinations from left to right of the stacked bar, it's clearly that COVID-19 is the biggest issue, and it's expected to be around for 3 years, even as we exit and when we exit. there's going to be after effects in terms of adaptation. But I think just as interesting here is that, and Andrew has touched on this a couple of times, that technology change and advancement and the rapid pace of that is very large as well, and it's just been accelerated, and this is where the digital overload problem comes into play. You know, and at Celent, we write research and advise clients on the strategic application of technology, and being able to have more open, componentized, integratable, flexible, workflow-driven solutions, you know, that can help integrate across different channels, different lines of business, different customer journeys is becoming very, very important. So, and Andrew will get into that in more detail in a few minutes. Just a couple other quick things here. It's also relevant to say that, you know, the global economy, while it's been rejuvenated in some areas, is weak and declining in others, including, you know, here in North America, is going to be facing us with challenges. And the fintech competition is going to be either helping and or putting pressure on the traditional financial institutions, if you will. So, Andrew, any additional thoughts here on the next 3 years?
I think you've pretty comprehensively covered it, Craig. I think probably the only thing that I would say is I see the top two as being potentially complementary. People who filled this survey and would have understood that there is a vaccine coming at some point. You know, COVID wasn't there as a knee-jerk reaction for 6 months. It's there for a reason. But as a result of that, you've got that technology change and the advancement. I think that's coming up that list for, well, we're not going to go back to the way that it was previously, sort of back to the comments you made very, very, very early on. You know, there is going to be a permanent change, and we need to use technology for that.
Okay, great. One last survey slide. We've dug into a lot of topics with financial institutions, and the one last thing that we found that was very interesting was a majority of financial institutions agree that excelling in both digital and in-person customer engagement is still going to be needed in the future and needed well. It's just a matter of when and how do you combine the two. And so you can see those top two results there. And we asked the organizations, did they strongly agree or somewhat agree with the statement? Not shown here are the other couple of responses, neutral, somewhat disagree, or didn't agree. So, but the top two areas here are the most important ones, and you can see that being able to have that omni-channel, cross-channel, human-to-digital handoff interaction is going to be even more important going forward than it has been, up until 2020. And the mandatory shelter-in-place orders that we're all grappling with, and here in Northern California, where I'm based, have just gotten tighter, leading into the holidays. They are creating opportunities for financial institutions to disrupt instead of being disrupted, and to help meet those customer preferences and behavior requirements that are changing. So it's a matter of how do you get through this and plan for it and come out of it more successfully at the end. So to summarize, my outlook and what we've talked about so far, we strongly believe that both customers and their financial institutions are experiencing digital overload. It's not going to go away soon because of the social distancing requirements and what we believe is going to drive that for the foreseeable future, certainly well into 2021, if not throughout all or most of it. And that's really going to drive how customer engagement and work from home is going to exist for the foreseeable future. And it's going to take time for a lot of organizations to pivot. And so then the question is, how do we most quickly, effectively make that pivot and transition so that you as financial organizations can out-compete your firms and hold on to your customers and grow your customer base. And with that, I'll turn things over to Andrew. Andrew?
Thanks, Craig. I'm just laughing here because I've made so many notes from all of that that I'm just realised I've made them all over my original notes to keep me on track for this part. So this could be fun trying to decipher what I'm going to say. What I will say though is please ask any questions into the Q&A box. If I don't ramble enough now that I can't read my notes, then I will certainly try and have a couple of minutes at the end for those. So what I want to do is take all of that insight and that new understanding into what customers want now, which is that outstanding personalized experience across both those traditional and the modern channels, and focus on that how we get started. Because, well, customer experience and engagement is a tricky old beast to master at first. It can be quite daunting, but it's not actually like that. There's some really practical best practices that you can do to get started on the right path, and many of them build on stuff that you've already done. Like Craig said up towards the top of the hour, we've got a lot of technology and processes already, especially in the digital arena where we're already transforming. So if we can harness the experience and the process from all of those, and then expand that into the wider world, we're not starting from scratch in every case. There's 4 areas I want to cover today, but they all actually work together in sequence. The first area is in making sure that you're prioritizing the right work. Our current state, so the entry point, if you will, is really quite simple here. Every organization proudly states that their customers are the most important thing to them. Very few financial institutions claim to be process-focused or silo-based organizations these days. Marketing had a word about that, and they're not allowed to mention it. But there's also the issue that the real blocker to customer-focused innovation starts with the cash. There's always more money there's always more projects than money, or resource than money, I guess. It sort of equates to the same thing. But it means that we have to prioritize, and that's usually based on the benefit to the organization in terms of cold hard cash. Either net new revenue, savings versus last year's operating plan. That was fine in the past. But organizations in the past were really revered places where you went cap in hand to ask for an accountant to begin a relationship. The days of dressing in your best suit to meet the bank manager are long gone. We've got a whole world of options that put the customer in charge now. But the way that we've prioritized the projects hasn't really changed with the times. The risk now is that in chasing that net new revenue or cutting the costs of existing services, we lose the existing customer base. Giving a customer an experience that makes them want to stay, and giving them the right experience so that they buy more, that's not something you can ignore anymore. We've seen it in Craig's statistics. Organizations recognizing they need to personalize more to give that better experience. That overall recognition that customer engagement is really high up on those lists now. But it is often ignored when it comes to translating that into projects. The number one question I actually get asked when I talk to people all over the world is, how do I get my customer experience, my executives to care about the customer experience? You do that really simply by making it simple for them. The financials for a project, yeah, they are important, but a spreadsheet isn't the ideal way to prioritize in every case. Put all your project's details into something that visualizes them in terms of the benefit to the customer and the speed to market, rather than just the benefit to the organization and the speed to market. That way you've got a really simple matrix that shows which projects give the customer experience improvement that your chief executive has already committed to in the most recent annual report. Now that helps with the prioritization, but what it really helps with is when you hold the executives accountable for delivering the strategy when they're doing the prioritization process. If you're in a position to circle every project that got funded for next year on a matrix like the 4-box model that's on the screen, you can start to see if anyone really cared about the customer or not. If all the projects are low on the benefit axis, you can take that back to the executives at the point that they're reviewing that first draft. Show them they're not delivering on that customer strategy. Takes a little bit of the nerve the first time, but that sanity check is actually often really appreciated because it's a very different way of showing the end results than they'll be used to. Now, just one quick pro tip on this though. Don't do it too late. If you go early, after the first draft's been created, you're supporting your funding committee by showing them new ways of considering the results. You go after the budgets have been agreed though, You're just that person that points out that they got it wrong when it's too late to do anything about it. The first one gets you promoted for being a strategic thinker. The second one, just don't go with the second one. Don't go with the second one. So let's assume you did that. There's plenty in the plan now to improve the customer engagement and the experience. Where do you go then? Well, it's time to map out the current and the desired states. This is where we can really start to leverage a little bit of what we've already got, because pretty much every digital process has already been mapped out. There's a real problem with process mapping, though. That's that if you start your future state from the point of view of the systems and the processes that you own, you naturally encourage compromise. The customers don't know that opening an account requires 12 different systems to interact with each other. To be honest, they don't care either. So while you end up compromising your end state because you're subconsciously planning it around the process for system A and system B to talk to each other, you're actually compromising on the customer's experience in the end. The other problem is with the digital maps that already exist. They're not an issue on their own, they're often very good, but the digital maps often assume that the end-to-end process is going to be fully digital. Customers don't think like that. They do whatever works best for them. That could be to switch channels 10 times in a journey. It could be to do everything on one channel and switch right at the end, just like I did when I took out my mortgage. Everything online, right the way through to the signature. And then, even though I was being offered a digital signature, just went into the branch and signed. Why? Because I'm a human being and I do odd things. In this case, I actually wanted to look someone in the eye and ask if I was doing the right thing, signing away my life for probably the largest amount of money I'm ever going to take out. A digital-only map doesn't capture that. So if you map at the channel level, you lose what the customer's likely to really do, and you send it with a lot of theoretical journeys that no one ever really takes. So make sure you're mapping the journeys that the customers may actually take, not the processes behind the scenes that the data is going to flow through. And make sure you're taking extra care to focus on the moment that the customers might switch channels. Remember, we want modern and traditional interactions because the evidence shows this is how we're going to be successful. So we have to plan for the experience to be good, not expect it to happen magically. Now, there's an underlying problem with journey maps, and it's probably important that I point it out. And that's that journey maps are just people's opinions. You can have all the focus groups you want, but there's still a risk that there's going to be someone's view at a particular moment in time. It's not a great way to get focus on the experience across the organization because it only takes one executive in the room at the funding committee to point out that their particular pet project's based on X number of other data points. You're screwed at that point. We need to fix that. And again, we can start to leverage some of the experience that we've already got from our digital world. The current state here, many digital processes have got fantastic tracking in them to see who's doing what on internet banking or your mobile wealth management app, or whatever you might have got in that wonderful digital world. It's a really good start point when it comes to getting the data points to show why you need funding to change and improve the experience across all the channels. There are a couple of challenges, though, with the current state. First one is that the solutions that we usually use to capture the data are just that. They're data capture solutions. Not particularly good at turning it into something that's really useful for you. I know one organization where they use real industry-leading digital tracking techniques and technology. And yet when the head of strategy wants information on what's working and what's not in his digital space, 10 to 14 days before the data gets to him. There's an entire industry between the data and him. They extract, they sort, they scrub, they transfer it to Excel, they visualize, they put it into a PowerPoint presentation, then they review it to make sure it's actually accurate. He needs to check that data 4 to 5 times a day, and he's getting a feed a week, maybe 2 weeks behind live. You're not reacting well, really, to a commitment to improve the experience if you're only able to do it after 2 weeks of complaints have arrived. The second problem is that digital data is exactly what it says on the tin. It's data about the digital channels. It's not full customer data. When you track the data at a channel level like that, you get some really massive holes. Remember, the customers switch channels. So if you're having to switch technologies and databases and ways of visualizing all the results, things like that, in order to follow them through that awkward mix of modern and traditional interactions with you on that journey, you're going to struggle, and it will cripple your ability to go beyond this stage. I'll come on to going beyond this stage in a moment, but the recommendations from those problems are really quite simple. Don't just focus on the data gallery. Make sure that whatever technology you've got following your customers through their journeys also has the ability to show you the results. Ideally, get them embedded into your journey maps so that everyone involved in the journey from, I don't know, lines of business, operations and strategy, right through to the IT development teams, so that they can track what's really happening, not what they hoped would happen. And also make sure that the technology is capable of tracking every interaction, whether it's a digital click, a mobile button press, branch application, operations back office teams working through their part of the processes even. If you track everything the same way, you never lose sight of what the customer's doing regardless of which channel they move to. Different tech on each channel, you've got a problem. So we've prioritized the projects. We've mapped the journeys. We've added in the science to prove that there's something that needs to be fixed. Everything there is about selling the case for change, right? And that's pretty much where most organizations' customer experience teams end right now. But as an organization, you still need to do something about it, actually make the change. Like I said, the reality here is that in nearly every case, the team of customer experience experts, they're almost powerless all of a sudden. And that creates a real problem. Even once the budget's agreed, they can't do anything. They need to align a whole series of IT teams to get projects up and running, potentially wait months to get started. The customer doesn't really care that it's that hard, so you need to move faster. Best practice, if there's such a thing here, it's more in the realms of managing digital content and personalizing it. Although, as Craig's shown, that's still a major concern for a large portion of organizations because it's still high up on the priority list for most to get fixed. When it comes to improving the communication side, marketing are pretty good at managing their own very simple, almost static content, but that's about it. When it comes to keeping the customer experience high with all the other communication touch points, there's often no ability to change anything at all, and IT have to be engaged through it all the time. The cutting edge right now is in using the information that we've gained about the customer and then personalizing their experiences completely by showing them that next best action. Not the next action in the process, the next action that's recommended for them as individuals based on that data that we've gathered and a little machine learning and AI. It's a phenomenally powerful way of creating a great experience for customers and making sure that they're always getting the right actions. Bit of a double-edged sword though, for a couple of reasons. Firstly, if you're not able to offer the same next best action across all the channels, you're going to confuse the customer. If they're switching channels mid-journey, the journey suddenly changes because you only have the next best action part in the digital channels, not in the contact center channel, for instance. You're creating a disjointed experience. They're going to get different advice from you, and that just creates confusion, not improvements. And again, Craig referenced that a while ago when we were talking about different functionality on internet and mobile. So you really need to make sure that's the same. And secondly, if you've not been able to track all the data for the customer across every channel, you've got black holes in your understanding of what they've already done. You don't want to be in a situation where you've tracked that mortgage application online and you've seen the customers dropped out, so you've sent them their next best action, maybe showing them a nice little tempting rate to get them back into sign, only to find that they've already signed at a higher rate. They just went and did it in a branch. Now, delivering great engagement and experiences in modern and traditional channels together means delivering the same high level of quality of experience across them all, not having different experiences on each. If you do that, you can end up just disappointing and upsetting people, especially if they realize they could have signed a mortgage for a lot cheaper an amount. The way to solve that is to to link everything together. Yes, you need some great experience orchestration software there, but you also need to start by understanding the journeys that they're orchestrating so you know what the customer's options are. You need to be tracking the customer everywhere so you're orchestrating the right action. And you need to be able to tweak those actions as soon as you see something changing with your data. That means empowering those customer experience specialists, putting them back at the heart of improving the experiences, giving them the ability to write those next best action rules, actually orchestrate the experiences, not leaving them on the sidelines, waving their booklet of journey maps, all the development teams that won't go fast enough because the experience just isn't good enough. It also means understanding that your communication capabilities are critical to your success. You can't just imagine an action and expect the customer to get it. You need to deliver it to them. And it needs to be fully personalized, whether it's a smartphone push, a WhatsApp message in those sort of true digital fashions, data feed to a branch, a contact center system, could be an email or an SMS in a pseudo digital fashion, could be an old-fashioned piece of paper. You need to be able to communicate well with your customers. Can't do that if every one of those channels that I mentioned handled by different software, different IT teams, and different functionality. Back in my old life, we used to think of our branch staff as the absolute gold standard of the customer experience. They were dedicated to delivering the very best possible view of the bank so that anyone who walked through the door got a positive experience. I still think they are the gold standard, but customers now expect so much better from every other channel. If we can improve our understanding of the customer and target them with really highly personalized actions across all of those channels, communicate that well to them in a really highly personalized manner, we start to solve that digital overload problem, and we put our organizations in a great place for the future. What I've just talked about is really a very simple flow to get you solving that digital overload problem. It's really simple. You prioritize your projects to show the customer benefit. You map the journeys so you understand what the experience needs to be. You have the scientific analysis in real time so you're seeing how your solutions are being used. You orchestrate individualized experiences using the knowledge that you've gained. And you communicate that in a fully personalized way to your customers across all the channels. At Quadient, we're really proud to have the only fully integrated product suite that handles every single part of that flow. From those first footsteps into the world of customer experience, right the way through to delivering hundreds of millions of fully personalized interactions and communications on all the different channels, all from one solution set. If you'd like to know more about that, please get in touch with us at the website. But for now, I'm finally going to shut up for a moment. I always love working with Celent. It's the first time I've had a chance to work with Craig directly. Craig, it certainly won't be the last. But I'm really looking forward to seeing what those survey results are that we asked the questions about at the beginning. So I'm going to hand that back over to you, and I'll let you press the button for the big reveal of the poll results. You there, Craig?
Yes, I am. David, can you take us to the poll results next? Okay, great. So there we are. We asked about what are the top 3 challenges your organization is facing in its effort to engage and support with customers. And you may have noticed that we asked you the same questions that we asked on slide 9 of the survey respondents this summer. So we do want to talk about these results here and compare and contrast them a little bit with the other survey results. So the top 3 here really ahead of the pack are the inability to quickly affect changes to systems. That's pretty interesting from one perspective. Compared to the survey results from this summer, that was not as big of an issue as it is here. But certainly it makes sense that it's a common problem if you have legacy mainframe, client server-based systems, specialized point solutions, not a lot of workflow. the lower customer utilization of digital channels, that is in direct parallel. That was the biggest challenge identified in the Celent Arizant survey this summer. So that's interesting, and I suppose good to see in terms of the two audiences, and this inability to personalize. Again, we said on another survey slide that while the customer utilization was important, the larger challenge was the inability to personalize. So interesting how those results appear to be pretty consistent there. Andrew, any thoughts before I continue here on what's showing?
I think that one at the top there, it's really interesting, and I wonder whether it's down to the makeup of the people that we have in attendance today versus the makeup of the people who answered the original survey. Maybe the people today are a little bit closer to the coalface, if you like. I'm back 20 years ago. I was just now starting my first job in banking as a COBOL programmer, and that was a problem then. And one of the biggest problems we had with it was that we never thought that we got the priority on trying to fix that from the senior management. They didn't necessarily see that quite the same way. They were thinking a little bit differently. So I wonder whether that's right up at the top there.
Yeah, makes sense. If you're a business person, you'll be looking at customer utilization and so forth, and personalization. If you've actually had to build and deploy systems, I can see why that's number one. And certainly the cybersecurity risks are up there, which was number two in our surveys, and the staffing challenges as well were also number three in our survey. So a lot of consistency there, but I think it's very important to see in terms of root causes. If you can't change the systems, the people who are in charge of deploying those systems will tell you what the most important issue is. So great. Well, that's good. That's enough on, I think, the polling question. Very interesting result. Let's turn to the Q&A and give you some direct responses to your specific questions.
Sounds good, Craig. Let's just do that. We've got about 7 or 8 minutes left, and we have a ton of questions. So I want to thank all of you who've been enjoying the presentation today for sharing some of your questions with us. We do have time for more, so if you do have a question, we are prioritizing them. So if you've got a question that comes in late, we'd be happy to move it up the line so we can make sure that we get those questions answered. Let's take a look at one here at the top, and I'll just go ahead and read it out. And Andrew or Craig, whoever you feel is more better positioned to respond. The question reads, do you see the challenge between CMO and CIA function responsibilities a challenge to achieving optimum results, and what should FIs do to address that challenge, if so?
Maybe I'll have a go at this one first, Craig, and then you chip in with your views. I see this historically as being a real challenge. You've got CIOs that really want to hold on to their empire, and you've got CMOs that are sat there saying, we need to own content, we need to own change, we need to own the experience. But I see that a lot less in the last few years, and I'm really starting to see it swing the other way, where they're trying to work together now. And a lot of that's come down to just the sheer amount of change that the CIO now needs to handle. Where historically that would have been that they never had enough people to do the work, but they got a relatively large amount of people to do the work. Now you've just got so many different channels that you're trying to deal with and trying to advance very complicated functionality on, that things like handling content and being in complete control of all the different places that you might want to personalize, it's become a real problem to them. So they're more willing to start to have those conversations with people like the CMO, people like line of business owners as well, not just the CMO, about saying, maybe we should get together here and try and work out a way of safely handling that communication data and that experience data between the two. Craig, have you got a view on that?
No, that was brilliant. We have a lot of questions from this great audience. Let's go on to the next one. Yeah.
Sure. Here's another question that came in relatively early in the presentation. How do you recommend measuring or / quantifying the benefit to the customer? Sounds like a tricky one, but an important one. What would you respond to that? Quantifying the benefit to the customer.
The way that I always recommend this isn't to go at traditional KPIs like Net Promoter Scores. They're incredibly valuable pieces. But when you're starting to look at an experience, look at the complaints. Look at the real data that's coming in from people that aren't getting the result that they need. And then also look at things like drop-off rates. For an onboarding process, are you finding that 80% of the people that start the process don't actually finish it? They're the key performance metrics that are going to really change people's minds at that senior level. People are actually finishing the process, people are getting what they want, and actually a genuine drop in the number of people that are complaining. Craig, any view there?
No, again, that was great. Let's go on to the next one.
Here's another interesting one, and you covered so much in the webinar, it's hard to imagine anything you didn't cover, but here's one that maybe opens up the portfolio, the palette a little bit broader. And the question reads, as a global business, does Quadient see variances in global adoption and strategy around the world? Are you seeing that customers in certain parts of the world are maybe resolving some of these challenges better or different than others? And then the person was curious about how the United States banking customer sort of compares on that global slate with regard to some of these challenges you mentioned.
Oh, these are all for me. Okay, I have to work for my money here. There are definitely variances in global adoption and strategy. I don't necessarily see that customers are more or less digitally inclined. I think it depends on maturity there more than anything else. The variances are often down to how early a region really got to grips with digital and started to work on some major functionality there. In Asia Pacific, we often find that customers our banking and financial services customers are way ahead when it comes to thinking in terms of the customer experience side of things there. And that generally leads to higher digital adoption rates. But yeah, the customers, I think everybody wants that omni-channel experience. How comfortable people are with it is more how long that functionality has been available for, rather than whether there's a real cultural difference as to people in France, for instance, might be culturally refusing of digital, whereas they might prefer branches or anything like that. There are nuances, but I don't see a massive difference there. Craig, I don't know, you've probably got more data about US banking customers.
Well, I've actually looked at International Monetary Fund and World Bank survey data, and, that looks at different countries and regions. And the United States is very different and oftentimes very behind other parts of the world with respect to digital adoption, sometimes very much with respect to Europe, and oftentimes in areas that have been perhaps a bit later to the technology game, that have skipped the mainframe and the client server world and have had to go digital, in parts of Asia, for example, or South America, or even the Middle East. You'll find that you have more digital natives, and you've got, if you look at, payments and microloan technologies done on mobile devices in Kenya or other parts of Asia, the customer journeys go straight to digital, and in some ways they're easier. You've got greater adoption because you just have digital mobile technology if the nearest branch isn't 50 or 100 miles away versus maybe 5 or 10 miles away here in North America. So yeah, a lot of dramatic differences there. I know we do have a few more questions for those who want to stay late. David, do we have time to go over 2 or 3 more?
Certainly. One question that I wanted to take, because I thought it really does go to the heart of a lot of what you have uncovered in your surveys and what we've learned today from the attendees. And this question asks, what are some of the specific challenges to providing more personalized service to banking customers? You both indicated that is a serious issue, and I'm just curious, what are some of the obstacles, and then how are banks and FIs overcoming these obstacles?
Craig, do you want to take this one, or do you want me to go for it?
Yeah, I'll say in brief, I think we did, address that maybe in bits and pieces, and to try and knit that all together, it's a people, process, and technology challenge. It's just not the technology, and I think Andrew talked about this a lot, and I think it came out with the CIO CMO question as well. It's one thing to put the technologies together, but organizations need to change the way they manage technology teams. So you've got people from marketing, legal, compliance, tech, ops, branches, on those project teams. And we find successful organizations that go towards, lean IT development and utilizing DevOps to bring in tech ops and the dev departments together, but also combine improved staffing, training, changing so that the operations and the people can get used to that faster incremental pace of change happening. That really works well in order to tie together the customer experience change recommendations that we've laid out here today.
Yeah, I think that's a great answer. I think if we were to delve down into that technology aspect, I think the sheer number of channels is causing a real problem to providing that personalized service. You're in a position where, in many cases, each of those channels is handled on its own technology by its own team. And if you're trying to get that cultural change so that you've got that omni-channel, you're getting the same experience, the same high quality across everything. Just the cost of doing that, if you're not actually managing everything on the one platform, can be quite prohibitive.
Excellent. I think we've got time for maybe squeezing two more quick questions, and I think we've got one for each. How about that? So let's do this. Craig, well, we got you there. Let me ask you this question about the survey respondents. And the question reads, why do you think the survey respondents thought that fintech firms would be less disruptive to traditional financial institutions than both COVID-19 and technology change in general?
Yes, here we are talking about fintech. And so that survey, and I think I can jump to those survey results, right? If I just scroll back there. Let's see here, push to audience. Yeah, so there we go. So we saw that COVID-19 was the biggest. I think that makes sense at the top. The technology change and advancement, I think we saw in the group's survey results that the inability to change quickly was a challenge. So 1 and 2 seem to make sense there, but fintech firms or other competitors from outside banking, that's third, which seems pretty high, but why isn't it 1 or 2, I guess would be the question. My response there would be to say it's, amongst a list of many, it's very high, but I think we've seen, and I think the positive and the competitive aspects of fintech are still there and going to be with us. We're continuing to see a lot of investment, but we have also seen a lot of fintechs transition their business models from disruptor of banks to the partner of banks. And I think that's part of where the survey results are coming from. I do perhaps agree with the question that there are going to be at least a few large fintechs that will impact dramatic, disruption. But we're also seeing a lot of M&A where other fintechs are getting acquired and or becoming partners. So I think it's a market in flux. The fintechs as competitors themselves. We've seen some M&A challenger banks who are getting acquired. I think there will be a few large fintechs that are truly going to disrupt. But if we're looking at the entire market, perhaps that's why the survey response here is maybe in the third slot versus 1 or 2.
Well, that makes quite a bit of sense. Let's go ahead and finish up with one last question, sort of the last question that's the first question in many respects. And this one is posed to you, Andrew. And the question reads, what's the first project that you see your customers embarking upon when they try to improve their customer experience, and why is that the first?
The old "where do I start" question. I think it varies, really. There is no one answer to this. The way that I usually recommend to our customers is start with something that's quite simple. Start with something that has a high customer impact. And you don't want something that's going to take 2 or 3 years to implement. You need to be building confidence, both internally in your team, that they're going to see some results, but also, sometimes your senior people, they might give you a bit of money and a bit of a tryout, but they're not really bought into it. So you need some quick results straight away on that. But that high impact area, I always say, don't take something that is already okay. Every single person who works in a bank, a wealth management organization, a pension fund, wherever they may be, they can tell you of a really bad customer experience. It's a sad fact, but I could do it when I worked in banking, and everyone can. So take that one, the one that isn't already 95% right, and then go for that because it's already failing. You can track some real change as a result of it. So that's where we always recommend is start with something with a high impact that isn't going to take forever to do.
Excellent. That makes quite a bit of sense. I'm afraid that's all the time we have for today. I want to thank everybody for your questions. This is one of the webinars we've had the most amount of questions come in some time. That's really, really fantastic to see. I want to thank both Andrew and Craig for an insightful conversation on customer experience, and one I'm sure we can tell is going to certainly need to be followed up on in the months to come. And again, of course, thank you to you, our attendees, for attending our webinar here in December. I want to let you know that a copy of this presentation will be made available on the Finovate blog in the weeks to come, and that if we did not get to your question, we apologize, but we will reach out to attendees after the presentation and respond to any of those questions that didn't get answered. Again, we got quite a few, which we're quite grateful for, and we will get back to you if we did not get to your question. But that's going to do it for us today. Thanks again for joining us for our Finovate FinTech Full-Time Review. Have a great day, a wonderful week, and a fantastic holiday season.